Hi guys, it's Ronnie. It's Thursday, February 1st, after market hours. And today we're going to talk about earnings and some of the earnings that have been reported this week by the Magnificent Seven and some other big stocks in the market. It's really moving the market, and we're going to talk a little bit about the Fed as well and some of the other factors that may be in play over the coming weeks. If you haven't been to our channel before, welcome. I'm Ronnie, and this is Trading with Ronnie. Our channel is really dedicated to the part-time trader. I have a full-time job and really don't have time to day trade and look at things on the very short term. So I try to help others find short and medium-term swing trades to put on that you don't have to check on every second of the day, and that you can make a little money on the side for your nest egg. So welcome to the channel. Ask me any questions you may have. If you have any stocks you want me to look into, I'm happy to do so. Just subscribe, like this video, add comments to the chat, and I'm happy to get to those before our next video. Okay, well, let's get started with Apple. So as most of you who have been following this journey know, I've been short Apple recently. And so as you can see, I'm going to change this to the daily time frame. Apple did report earnings post-market, aftermarket today. And so, you know, I've been short over the past few weeks in Apple, and I have gotten out of my trades, gotten back in them. So last time I got back in the short side of Apple was up here as it was rolling back over from a lower high that it made earlier in late January, really, like last week. So if you were to follow that trade, you would have been short from around this 195, 196 area. So I had both a combination of puts, like 3-week out puts, as well as call spreads that I had sold. So I trade options sometimes, most of the time really, when I'm talking about swing trading, because it is a little bit less risky from the perspective of you have defined risk for the most part. So I did buy some puts up here. I also sold some call spreads in the 200, 210, 195, 200. So I've sold a couple of levels of call spreads as well as bought some puts. I still have a call spread on, as you can see, but I have sold out of most of the other positions. And I actually came into the earnings report with no position in just plain options. So I had sold all of the options, all the put options that I had bought up in this area, not just yesterday, not just today, but yesterday, the day before yesterday. So I'd been selling them starting around this 189 area, just taking profits along the way, because it's a pretty rapid move in this stock. And, you know, I try to take profits at certain percentages. Like if I've made 50%, if I've made 100% on the option, I'll take some profits, of course. And that way you lock those in, and you can leave a couple to run as well if you'd like. But because earnings was coming up, and during earnings, the premium kind of falls off pretty hard after earnings from the options, especially the near-term options. So those are the ones that I'm into, the February, regular February options. So I was pretty sure some of the theta or the premium was going to come off those options. So I went ahead and sold all of the remaining options that I had between yesterday and today. And I still, of course, I still have the spread on, but, you know, with the call spreads that I've sold, you know, it's a good thing if premium comes off of them, because I have sold them. I haven't bought them. So this means that I can buy them back at a lower price faster. So, you know, if, of course, the stock stays below my short strike, which is way up here at 200. So I put an order in to buy it back. I believe it'll probably get bought back right when the market opens, because Apple did fall after hours. So technical analysis here. So this is kind of a topping pattern, right? This is a relatively, you know, short-term topping pattern in Apple. It could be an even longer term one if you look at it on like the weekly, for example. You could be looking at a double top here as well. But even if you look at it just in this area, okay, if you look at it just on the daily and just in these last two tops. So, I mean, the target for my initial trade here was down in this range where this gray box is. That's the prior low and from where it kind of snapped up the last time. And so it actually has gone into that and bounced through it, actually fallen through it rather, and bounced. And so it's kind of sitting in the middle of this range right now. So depending on what it does tomorrow is going to determine my action or, potentially patience on a new trade down the line. So overall, because of the weakness in this stock, I think it could, over the coming weeks, go down to this level of between 166, 170, this area right down here, which is, the last time it made a big move up to the prior high that it made of 199.62. So I'm looking for kind of it may bounce around here. It may, come straight down. I don't know. So what I'm going to look for tomorrow after the open is what it does. Does it stay in, a relatively bearish flag? Does it retrace a little bit and then come back down? Does it retrace and push through like a 50% retracement of the move after hours? So if it continues to stay relatively bearish and just kind of consolidates, I may go ahead and buy some more, or rather sell some more call spreads for March, probably at the 190 level. So up here at that 50% retracement of the move, the prior down move, right? So looking at 190, 195, 190, 200 call spreads, depending on where they are. I could wait on that a couple of days though, depending on how the market acts. And so if it does choose to, come back up a little bit, I could just wait for it to have a point of rolling over if it ends up rolling back over, maybe at the 20 moving average. So I'll have to see how it acts tomorrow. Tomorrow's kind of a big determining factor as to whether it's going to continue to go lower or if it's going to retrace. There's going to be, of course, a lot of analysts talking about it. There's going to be a lot of attention on it. So tomorrow's action is going to be important. So based on tomorrow, we will make a trade on Apple either tomorrow or we'll wait until, it consolidates out of this big drop that it's had. I mean, it's not that big. It is, a $6 move right now, $5 move, a couple of percentage points down. So let's see how it acts around this area that its prior low is. If it breaks it, again, that's bearish, and I think it's going down to this 171 area. So that's Apple. And so that is one of of course, it's a big tech stock. It's actually, pretty weak considering if you look at the other two, which we're going to go through today. So let's go to the next one that reported after hours today, which is Amazon. So Amazon is pretty bullish after hours. So if you look at the weekly on Amazon, and a while back, I think we were talking, and I think in my 2024 market overview, I was talking about the tech stocks, the Magnificent Seven, and where the opportunity may be in the market. And I think I had mentioned Amazon being somewhat of a catch-up trade potentially. I'm not in it. I'll just be honest. I'm not in Amazon because it's moved really quickly. But I think, it obviously has pushed past this. So this gray bar on the left here is actually this gray bar right here on the right, which is around this 166 to 170. 171 area. So it actually in the aftermarket has pushed through that up to 174.50, and now it's kind of fallen back down to the top end of that range. And so it could very easily go to this higher band up here, which is where its prior high was at 188.65. And what in that range between 178 and 188 really. So if you think about at the Amazon's potential action, it has the potential to push back into that range. and then retrace, actually. I mean, it's a pretty strong move for such a short time. And even though Amazon, is a great company, I just, the action on this stock is pretty interesting. It's quite volatile. I mean, if you look at it on the monthly, that's a lot of strong bullish trends, and then consolidation, strong bearish trend, and then a V reversal into a bullish trend. So let's look at it on the weekly here. And you can see it kind of has this reverse head and shoulders look to it, on the weekly. You can see this kind of, here's the shoulder, there's the head, here's the shoulder. And so like the typical retracement, or the typical move that these stocks make out of a pattern like that, if it's bullish, is the distance, between the bottom of this, or the top of the reverse head and shoulders pattern, to the neckline. So if I were to just, kind of draw a bar to measure that and just duplicate it and put the, let's go ahead and duplicate this drawing and then just put it up here from the neckline. And this is kind of the potential move. I know this is kind of messy, so let me just make it a little bit clearer. But it has the potential from, to go back up to a new high, actually. I mean, it does have the potential to do that based on this chart pattern. And so that's kind of your target. If you're really bullish Amazon, obviously tomorrow's not the day to just buy into it. I mean, this is a little bit of a resistance here at 170, 171. So it could potentially pull back. But if you're bullish, you're able to get on any pullback. So if Amazon pulls back, so what I usually do, okay, let me just go ahead and do what I would do. So what I usually do is I put a Fibonacci in, a Fibonacci retracement on the move it makes after hours, okay? It actually already literally smacked that 50% retracement already in the after hours. But tomorrow, as it's moving through tomorrow's trading, I'll be looking at, is it going to come right back down to this 50% retracement, or even the 61.8 retracement and bounce? And to me, it's bullish. So I would be looking, if I were trading this stock intraday tomorrow, I would be looking for a bounce on Amazon, for potentially a day or two move to the upside. Potentially. I mean, it's going to be, if it doesn't end up, even if it bounces here and it doesn't end up going back above this 174.50 area, I mean, you probably need to take some profits and just keep it more short-term trade. So I'm giving you an option if you have the ability and want to trade this intraday, look for a bounce on the 50% or 61% and then buy into it on a bullish pattern in the charts, on the candlesticks, and then set your exit probably at the top end of this range. And then if it goes beyond that, if it doesn't cross over this 174.50, I would probably get out of that trade. For me, long term, I'm going to be looking for Amazon to consolidate a little bit before the next move. And then potentially I might even just be patient and wait until it gets into this area. I'm going to go ahead and remove some of these drawings because they're a little bit distracting. So I'm going to probably look at, if you look at the overall on the monthly, so this is kind of longer term, right? If it does, it's gonna gap up here tomorrow. Okay, so either it could fill the gap, it could gap and go, so it could just keep going into this range here. And then I would be patiently looking to see what it does in this range. The last few times it's been here, it's just kind of spiked up and come back down, spiked up and come back down, and then retraced. So I would probably be looking to sell some call spreads if it got to this area and didn't go through it. So my trade on Amazon from a swing trade perspective would be to wait to see if it did make it up here. And if so, that's the least risky trade, right? You've got your defined risk. You have your stop, above these spikes. And then sell some call spreads, 200. By the time it's up here, these 200, 210, 200, 205 call spreads will have some premium in there that you can take advantage of. And then, even if it goes sideways or goes down, it doesn't have to make a really big down move. You're making money. So that's what I'm looking for in Amazon. And then lastly for today's earnings, and we're going to go over some from yesterday as well, is Meta, which is the big one, I think. It's very clearly the monster chart for today. I'm going to go ahead and remove these drawings. So looking at it on a monthly, this chart is insane, right? It's a huge V pattern, V reversal, from August of 2021 down to November, December of 2022, and then 2023. It's just been a complete, reversal of that. It's gone up from 100, actually less than 100, probably around 89, 90, all the way to $400. And overnight, after hours, it's at 455. So that is, it's like a 15% move just in the after hours on this stock after earnings. Of course, it had great earnings. They're making a lot of money. They have a lot of monthly active users and user data that's just increasing. So they're growing their base of users. So taking a look at this on the weekly, that was the monthly. This is the weekly. It's in rare air right now, is what I would say. It is really gone beyond and surpassed all of the expectations of this chart. So if I were to try to put any kind of retracement or tracing on this, I would go from the bottom all the way to this top area, where it has been last month, right? The 50% retracements down here, but what we really want to look at is these extensions, because it is very bullish, right? So these extensions can kind of give us some targets. So when you don't have any targets, sometimes it's really good to look at the Fibonacci extensions. So right now, as of today, overnight, this stock is sitting at 450.485. So, it is going to gap up in this area if it stays where it is. So there's a couple of possibilities here. I don't think I'm going to trade Meta, but I'm just showing you that you could have a target of 480, right? As a kind of a short-term target, and then take some profits if it gets to that level. It could very well, retrace down to the 430, 435 level, which is like halfway of this move, and not even halfway, and then retrace, right? Or it could fill the gap completely. I don't see it doing that. This stock has been incredibly strong. Regardless, Meta is, the reason I'm sharing it is because it is one of the Magnificent Seven and has a real impact on the NASDAQ, right? Between Amazon and Meta, both being up quite a bit overnight after earnings, I anticipate the market to be really strong tomorrow, at least the NASDAQ. Other stocks that reported yesterday, which kind of, were interesting from the perspective of their moves. Google was pretty weak. So, they have, I'm just going to clear the drawings for you. But looking at the daily on Google just reported, and not today, but yesterday, and it was a massive gap right down here from the 150 area, 151, down to the 143, all the way down to 140. So it's still kind of in this range. And when a stock gaps down that much, you want to wait a couple of days, let it settle out and see where it ends up. But Google, it is one of the bigger tech stocks, and one of the, if the market continues to be strong, which it has been, and it's very strong overnight as well because of the Meta and the Amazon earnings. You have an opportunity to see if it, you can see from the last gap, right? Let's just look right here, the last earnings. Actually, you have a couple of things to look at. You got the earnings from back here last summer. It gapped up, and it kind of never really filled this gap until all the way back over here in October during those earnings. But you can see it gapped, and it kept going a little bit, and then it bounced, and it filled the gap up. So what I'm going to be looking for here is if it does have the potential to fill the gap or not. So I will be, I'm going to set an alert over this high of yesterday, which was around this 144 area. And so if it punches into the gap, I'm probably going to go long Google for like a couple of days or weeks trade, probably with both a call option and a put spread that I would sell. So I would sell a put spread potentially and buy a call option. And my risk, of course, my risk reward profile here would be if it comes back into like below here. I mean, I'm looking at it from the perspective of pushing into the gap and continuing to fill it. So if it comes back down and fails, I'm out of the trade. So it's a pretty tight risk situation. So you don't have very much risk compared to the potential reward. So that's what I'm thinking about in Google, especially if the market continues to be strong overall. I feel like, it will probably settle down and then start to try to go back up if the rest of the market is going up. Also reporting yesterday was AMD. So Advanced Micro Devices, one of the semiconductor stocks. You can see it didn't really have too drastic of a move. I mean, it did come down. Actually, it was down. Let me show you on this chart here. Yeah. So after its earnings, it actually went down quite a bit, but you can see it recovered most of that the next day and has actually recovered all of that as of today. And you can see it's rising in sympathy with the other tech stocks after hours. So it is on a recovery path from its earnings low. I did not trade AMD at all, but because it is kind of just in such a high, it's just like such a high stock right now. And all the AI plays, NVIDIA, AMD, I'm just not really interested in getting into them at this moment. But it does give us a kind of look or glimpse. Let's go to Microsoft last. A glimpse into kind of where these tech stocks are. And so Microsoft was an interesting one, actually. So, the earnings on Microsoft were it really didn't do much. Like it went up, went down, kind of ended up in the middle, right? Like with very little change when it opened. But even the next day, which was yesterday, it started to go up and then came right back down and just bled out the rest of the day. So it actually went down quite a bit, from the prior day, made a new high and then came down, which is kind of bearish. So even though Microsoft's a pretty good company, and I'm a little conflicted on this particular stock because I feel like I do like the stock, the company itself and its growth potential, and of course its venture into AI and chat GPT, of course, as well as OpenAI rather. And so looking at the chart itself, now if this bar ends up closing like this during the end of the week, like by Friday, and then the next week, so Monday, Tuesday, it doesn't get above this 415.32 and actually falls below the low of this week, 398-ish. I probably will look to sell some call spreads on Microsoft because that's a bearish pattern and my risk is defined, right? So I'll probably go above this 420 area to sell the call spreads. And then, if the chart gets above this 415.32, that's my stop. So I'll be looking for a weekly bar, hopefully, to close underneath this week's bar, and then probably sell some call spreads. I don't know about buying puts because I really just don't think it's that weak of a stock. I mean, it may do something like this, like it, did last time it had earnings. It may do something like a few weeks of like a little bit of a consolidation, maybe down to this purple complex trend line, or potentially this 385 level. So my target on it would be around 385 to like 370 to 375, depending on when it hits that line. So this is going to be, it's just a shorter term consolidation move, but it is a reversal bar, like a candlestick pattern. That's kind of a reversal candlestick pattern. If it ends up closing like this in a doji type of form, this doji, which means like a small, kind of a small body in the center of a bar with wicks on both ends. So that's, just means uncertainty. And so if it does end up, sometimes it's present in a reversal. So that's what I'm looking at for Microsoft. So Microsoft, would be a more like a current trade, like a sooner trade than the Amazon trade that we talked about. But there are two options for some trades on these post earnings Magnificent Seven companies. And then finally, let's just talk a little bit about the S&P 500 index, NASDAQ, and otherwise. So we had talked about this S&P 500 potentially. That's why this gray box is still here. We had talked about it being a potential cup and handle pattern. And maybe, if it continues its bullish trend, the target is the same, right? The depth of this cup pattern is the target. Like the move could be around that much to the upside in a cup and handle. Now, whether or not it gets there is another story. What depends on a bunch of economic factors as well. That can move the market. But historically, this is kind of that move would be towards the top end of that gray box. Now, I don't personally know that I'm I don't personally know that I'm ready to go long the S&P 500. I'm probably going to be more conservative. I am less into the S&P 500 as I am into the IWM. We've talked about this, so I am continuing to be bearish on the Russell 2000. Still hasn't pushed through the range that we've been talking about for a couple of weeks now. So it's still in this broader range on the weekly, and you can see the two gray bars are still, still haven't been closed above or below, right? So it hasn't closed above or below either of these bars yet. And so right now I'm still short. You can see I have some options, which are call spreads that I've sold up here, 200, 205, 210 areas. And so I have these set to buy back at a certain area. So that's 50% of the profit that the credit that I could make on that trade. I've chosen to kind of be conservative with all of the positivity in the market and the earnings, especially. You can see even a little bit after hours, it's going up. So the IWM's been pretty volatile. Yesterday was a great day for it. Today, not so much. So it's still down from where I bought it, which is why the call spreads are, a good idea here versus put. You can always buy a put, but with the market conditions the way they are, and the Fed was reporting this week, the Mag 7 were reporting earnings, I just wanted to be safer. So I'm still in it, still short IWM, and then the other piece, and I'll be looking for it to come back down to this area here potentially. This is midway is also a good target, right? So halfway into the range is a good target, and then if it continues to show weakness, the bottom of this range. The very last thing is XLE. So the energy sector we've been talking about. I've been short energy for some time using the XLE, multiple trades, etc. So I have bought some puts on XLE earlier in the week, and actually bought them on this day that the stock was up, because as XLE, the ETF, this is an energy ETF, as the ETF was rising, crude oil was actually starting to reverse and fall. Now this is January 30th. So if you take a look at crude oil on January 30th, you can kind of see what I'm talking about. So crude, January 30th, you can see the move that it made. So you can see the difference, right? So this is XLE. This is crude. It went kind of reversal pattern, kind of bearish engulfing candle. You can see this big giant red bar, which engulfs the bar bar before it, which is a bearish sign. There was also some news on, with Iran and some of the OPEC and some things here, which led to this rise in crude oil the past few days before that. Then it had a pretty bearish engulfing pattern, and then it didn't really go up the next day, just a little bit, and on the 30th, and then it reversed hard on the 31st. So XLE, was actually looking way more bullish, you can see here, than the crude oil. Not that they match exactly, but, if crude decides to roll over, XLE will roll over as well. So I do have some puts there, and I'm looking for the XLE to kind of stay in this channel and come down, around the 80, 79, 80 area, like this area here. Just come back. I mean, it may take some time to get there, but I think, I'm probably going to end up getting out of this position. The way that it shows it on the chart isn't necessarily the exact value that I want to sell it at. I probably will end up selling out of my puts halfway down here for like probably a 50, 75% profit if it goes here. It already actually did really well. It did really well yesterday. You can see I didn't sell them out yesterday because I was busy working. Actually, I didn't have my order in. Usually I have an order in. So I went ahead and put the order in today. It didn't end up filling down here, but you can see that it's pretty volatile. The XLE has been volatile today, but did close slightly down-ish, And so I'll be looking for continued weakness. And so that's energy and crude oil. You can see actually crude is much, much weaker than the XLE as a whole. So we've been talking about crude and, whether or not it's going to break this trend line. So still, it looks like it's still, not breaking the trend line. It looks like it's still bullish-ish, a little bit bullish, kind of a higher low, and it's moving its way up. But this is a pretty big reversal pattern here. So let's see what it does over the next few days. I still think XLE is a good proxy because the stock market's a little uncertain. And it tends to follow the stocks as well. So if stocks go down, the XLE will go down more than crude oil. But if stocks go up, the XLE will go up even when crude oil is a little down, even if it's showing weakness. So the target for now on crude oil is in this area, this purple line, or a little bit above it, probably right around here at 72. So that's what I'm targeting, is 72 on crude for the short term, and around 80 on XLE. So that's what my last trade idea is. And then the next video will go into a little bit more of the analytics on the analysis rather on the market itself. But I wanted to put some trades out there for y'all today, so you had some real actionable information for the next few days, because there is a lot of action in the market right now with all of these major company earnings. So thanks for joining. Have a great rest of your week and a great weekend, and we'll catch up soon. Remember to like, subscribe, and follow me for more content. Thanks.